Eric Muaded, Muaded.com, with a weekend market analysis for the US market for the weekend of June 20th, June 21st, 2015. Let's take a look at how markets closed on Friday. We see the markets were down, Dow down about 0.56, S&P and Nasdaq also down slightly, and we see that the VIX was up about 5%. Crude oil was down about 1.65%. For the week, we see that the S&P 500 was up 0.75%. For the week, the Dow was up 0.64%. And for the week, the Nasdaq was up the most, closing at fresh weekly closing highs and up about 1.3%. All right, let's go to the charts. If we take a look at the Nasdaq weekly, we can see that as long as it is holding above the previous weekly closing high of 5,092.09, that's a fresh breakout. And so the market does need to stay above that if it's going to record higher closing levels and if it is to increase on its momentum. Otherwise, a move back below 5,092.09 would be a failed breakout. In fact, if you take a look at the daily RSI for the Nasdaq, we can see that it did come back to this declining line of resistance as of Thursday's nice gain, and now we are looking at resistance exactly where one would expect resistance on the daily RSI. Keep in mind that it is back to a level where it has been showing resistance on the daily. If I draw it just there, you can see that the market has been stalling with pullbacks ever since this break here. There was a slight pullback, resistance here, there was a slight pullback, and also resistance here, which was this high for a slight pullback, and recently we hit that level for a slight pullback, and now we are doing the same thing here. So those two lines represent some type of resistance short term, and again the lines are that line number 1 there and line number 2. As long as they are showing resistance, one can expect the market to be a little bit on a pullback mode. Otherwise, for a true breakout with momentum, the market needs to be trading above those two lines. If we take a look at the Dow Jones, we can see that at the conclusion of this week, we are showing a very nice bounce on the weekly RSI. So holding above 50 is exactly what we wanted to see for those who would like the market to move higher. So as long as this is where the market is finding support on this line, that's good. Otherwise, if you're a bear, you'd like the market to eventually break this line of support and also to trade below 50 on the weekly time frame. As far as the price is concerned, we had been trading sideways as we discussed last weekend, pretty much in this zone where the market has been trading going back to about March of this year. So we continue trading in that range until we can move out of that range. One can assume that this is still a sideways market as far as the Dow is concerned. If we take a look at the Dow Jones Hourly, we can see that on the hourly as of late Thursday, we had already seen that the market had come back to this line of resistance. So the move on Friday and late on Thursday made sense, with the market showing a pullback after the Dow was up about 210 points on Thursday. It walked into hourly resistance, and as long as that's the case, the market should be still continuing to be on a pullback mode. If we take a look at the Dow 30-minute chart coming into late Thursday, we see that the market also ran into short-term 30-minute resistance based on this resistance connecting recent RSI highs on the 30-minute chart, and so we walked into resistance there, hence the pullback from somewhere around here off the highs of Thursday's trade. Since then, we see the market is on a pullback mode. That continues to be the reading, that the market is still on a pullback mode for now. If we take a look at the Dow Transports, we can see that just like we had a nice crossover going back to about late 2012, this crossover here led to the market moving higher between the 13-week moving average and the 34-week moving average. We've been discussing the possibility here that this could also be looking like another crossover, this time bearish, that potentially could be indicating that over time this market would roll over and go into a bearish phase. And so if that's the case, gotta be careful here that things can actually deteriorate. If you take a look at the 2-year weekly, we can see the level to watch on the Dow Transports is the recent weekly closing low. So that weekly closing low is at, no, scratch that, 82.99.75, which is this recent weekly closing low. Anything that brings the market below that number on a weekly closing basis would suggest that the market has actually deteriorated and could probably be looking to go even lower. So I would watch that number there. Below that, the market could be breaking down, because also we see the evidence here of that bearish crossover. Also on the Dow Transports, keep in mind we have another bearish crossover short term here between the 50-day and the 200-day moving average, which is bearish. We also see short-term resistance on the daily. If you draw the line like that, you can see the market hit that as of late Thursday and now seems to be stalling. So if it continues showing resistance on this RSI top lines on the daily, one would expect it to move lower after showing resistance. Otherwise, for the Dow Transports to repair the recent pullback, they need to be on a breakout mode. Right now we haven't seen that breakout mode. In fact, if we take a look at the hourly, we see that the hourly came back to a resistance level. As you can see, markets has been stalling on this level on the Dow Transports going back over the last month and a half or so. So this has been where it's been stalling, and as of Thursday's highs, it hit that level and is now pulling back. So yes, the Dow Transports also look to be showing some type of short-term resistance. If you take a look at the S&P 500 weekly, one thing I do like here for those who are bullish is the fact that it is still holding above 50 on the weekly RSI. So really, we've been trading sideways right there going back to about February of this year, March of this year. So market's been sideways, a lot of noise up and down, but at the end of the day, we are still stuck in this very narrow range. And maybe we need to get out of this range either for a bullish spike higher or for a break below that range for a new move lower. We are still within that range. We have to wait for some type of a conclusive move outside of that box. Take a look at the daily for the S&P 500, a simple line connecting recent highs. As you can see, connecting highs here, 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 here corresponds with the recent highs after Friday's strong showing. So the market showing a pullback here does indicate a little bit of a struggle to move above this line of resistance. For the market to be truly in a breakout mode, it needs to take out that line, something it hasn't done as of right now. Keep in mind, we did close slightly above 50. If we were to break below 50, expect a big down day, just like we had a nice move on Thursday because the market moved above 50. On the day, we moved back below 50. On the daily RSI, expect a big down day. Take a look at the hourly for the S&P 500. Just like the other markets we are showing, you can see that it came into resistance. If you take this break off the highs, which was this resistance on that line, and now as of this week's highs, the market hit that level and pulling back. So the pullback on Friday was well telegraphed. If you knew what you were looking for, we were expecting a pullback, and we got that pullback. And we'll see whether we're going to get a little bit of a move much lower after that easy identification of a resistance level on the transports. And so now let's wait and see what the next phase of this market could be after that resistance. Let's take a look here at one stock, and it is Apple here, and we see at the conclusion of the week a couple of things here. We had made an improving highs over the last couple of weeks, yet the technicals did not follow through. So that was negative divergence, a little bit of a problem there. On the monthly, we also seem to be struggling to hold the previous monthly breakout level, and as long as it is struggling to hold the previous monthly closing highs of 127.93, which is this monthly closing high, anything below that is a failed breakout. But the key also is to watch if it can defend that 69.1 level, then it is okay to hold. Remember, it's been above 69.1 since middle of last year, at about $90 post-split price, and had a nice run. So as long as it's holding above 69.1, I would give it the benefit of the doubt. We take a look at the daily also. We see that it is still trading within a range around the 50-day moving average, so sideways action for now, nothing to get too excited about. Also, it is above this line of defense based on the daily line where it's been finding support over the last year or so. So as long as it's holding above that range, I think it's a sideways stock for now, not broken by any means, but also losing some of its momentum. As far as the long-term monthly view is concerned, right now we are looking at the S&P 500, still trading above 69.1 on its monthly, and as long as the monthly RSI is holding firmly above 69.1, this continues to be a strong market. For those of you who are new to this principle or this idea, the market's been trading above 69.1 for the most part since March of or February of 2013, and over the last 2 years plus, market's been trading well, and defending that 69.1 level has been critical. Also, as long as the S&P 500 is holding above the previous monthly closing level there of 2104.50, it should be in a bullish phase. So right now slightly below that, but if it can move back above that 2104.50 level, that would be a breakout level. Right now it's struggling, but the key again is the RSI holding above 69.1. Take a look at the Dow on the monthly, and the Dow still has yet to reclaim the level above 69.1, which would be a problem over time. And also for now we can see that the Dow failed to break out or above its recent monthly closing high. So the Dow is not looking as strong as, let's say, the S&P 500 and the Nasdaq. The Dow, for the Dow to break out, it needs to be above 18,132.70, and right now we're looking at a failed breakout. Let's take a look at lastly here at the Nasdaq. On the monthly, the Nasdaq is the strongest, even as we can see. That's why it is leading the markets, trading at fresh weekly closing highs. And it is because the Nasdaq continues to defend very successfully, defend its monthly level holding above 69.1. So that's the key. It's the one with the highest level on its monthly RSI at 76, and that can also be evidenced by the fact that it is trading strongly, and also as we can see on the weekly, it is one of the major markets in the US that did manage to close at a fresh 52-week weekly closing high. So, a little bit of sideways action. Short-term market is showing resistance. Long-term markets are okay. Generally speaking, we can conclude by saying the market is still stuck in this range. Eric Muaded, Muaded.com. As always, good luck, peace, and blessing. EACS. Woo!